right, well, hello and welcome everyone to your midweek currency room. This is Ankit here, and as always, we'll be breaking down markets, take a look at what's going on. And as always, we follow a process. We do a top-down analysis. We'll take a look at what's happening in the broader markets, then bring it down into the currencies, how they're doing. Take a look at what the baskets are doing. Take a look at what the news is telling us, and then we'll get into those possible setups. So let's get into it.
Do you want to be a professional trader? Maverick Currencies is the oldest US-based Forex and crypto prop trading company that will pay you for trading with our capital. Trade our capital and keep 70 to 80% of the profits. We are looking for traders just like you that are hardworking and motivated. Click the apply link on the top right of this video to see if you have what it takes. That link takes you to a 4-minute video that explains the trader position available, and you read a list of FAQs that answer pretty much all the basic questions you have at this point. After watching the video and reading the FAQs, if you're interested, fill out an application, then you'll watch the full-length recruiting video, and then schedule an interview with one of our traders. Are you our next trader?
So as we jump into the market analysis, well, let's just jump right into the headlines here. So we definitely have a very quiet market in front of us. So the equity markets remain bullish, and the volatility remains low. Now, that seems to be the narrative for the most part in the last few weeks. We really haven't seen any big shocks, big changes, maybe a little pullback here and there, but nothing really too major. Now, this could vary based on the year you're trading. And I think this is where when you're back testing, your experience is going to be very much relied on what the broader markets are doing. And in a whole year, we get a lot of different cycles. We get a bullish movements. We get a lot of bearish. We get some reversals. This is definitely a bit more, I would say, on the quieter end, especially when we compare that to the last 5 years. This is, it seems like markets, everything's kind of in a sweet spot where nothing is really derailing things or moving things out of the way. We had this government shutdown, and guess what? My market didn't really care. Markets still remain positive. And we got some comments last week about getting some progress being made on that end. And then tonight at 7 p.m. Eastern Standard Time is where there will be a vote in the House. And if everything goes through as expected, then the government shutdown will end. Now, ending that government shutdown, again, I think, is anything going to happen in the markets? Well, we'll take a look at the price action overnight and see if the market jumps on that. But the big thing for traders is going to be that we will start to receive the data. Probably not this week. It's going to take a few days to get a bunch of data roll out, but we have all that vacuum of data that we haven't seen, including retail sales, CPI, employment numbers. A lot of that stuff is just not been released. So this is, again, something to kind of keep an eye on tonight. And then, and then we'll keep everyone posted, take a look at the schedule. I think next week, if that ends tonight, then I think the next week is likely going to be a very busy week as we get all that data, a lot of that data pushed through the markets. Now, outside of that, we have the Japanese yen, which actually now at the yearly lows. So, I talked about the yen overall. I think it just continues to, stay in that downtrend, even though we're having some bounces here and there. But overall, that's just really where we've seen a big move, is the yen making those lows here. Now, when we take a look at market outside of that, and you'll look at the numbers and say, well, yeah, there are pockets where there's not a lot happening, and then there are pockets where we have seen some movements. And that real big movement this week has been in the yen. And I think this is one of the things that, I talk about is timing things. Sometimes the direction, you just don't know how fast we're going to get there, or how long it's going to take to get there. And I think this is where it's very important when you enter a trade, is where you take a look at not only your analysis and say, well, this is what the direction is telling me, but also using the right time frame to get there. Now, with this current market environment, when things are so low on the volatility end, it's very hard to time it, because, could we get a breakout this week, tonight? We could get a breakout tomorrow. Then eventually you see a breakout happening. That's exactly how things are just moving over here. But overall, as you can see, they're sticking with that trend. Yen breaking down. And look at the Swiss franc. Now, this one really caught me by surprise because, Swiss franc, there's not a whole lot happening for Swiss franc to rise, but I think this is just the nature of how Swiss franc moves. We see periods of inactivity, and then suddenly we see the Swiss franc jumps up. Overall, one of the best term to describe Swiss franc right now is being a bulletproof currency, which means that nothing really piercing it through. Either we see a pullback or a bit of we see a big move, and then we see things sort of cool down a little bit, and then we see a resurgence in the move. That's just the way how Swiss franc has been moving. So that's the one currency I would say. It's hard to explain, but this is what we see in front of us. Now, the dollar, you can see dollar is slightly down this week, even though we can see that the difference between the dollar and the yen, there's still that divergence taking place. But dollar itself, even though it's in an uptrend, it's just not that strongest of a trend. Compare that to Swiss franc, which again, it's much stronger trend. That's really where, we're seeing a smaller percentage move. You can see euro is mostly flat. Pound continues to be on the weaker side. Again, remember we talked about pound just a couple of weeks ago. I really like that pound on the weekly chart, and I would recommend everyone to watch that pound currency basket and take a look at the weekly chart. And it's very interesting that we are testing that support. We'll take a look at the chart, but it's at an interesting point there. Canadian dollar not slowing so much, along with the dollar. And remember Aussie and the Kiwi. Kiwi seems like it's bouncing a little bit, but still Kiwi is falling short of the Aussie here. So the movements this week is definitely more in line with risk on environment, but then the Swiss franc really comes out as a surprise. But that's just the way how things are moving right now. Now, when we take a look at broader markets, you can see that the S&P up very nicely. The world stock index up very nicely. Gold is making a bit of a rebound here, 5% up to this week, and oil is down. Now, take a look at crypto. And remember, we talk about market sentiment. And that's such a big thing, especially when it comes to certain things that are not tied so much to the fundamentals, but they're more tied up to the sentiment. And I think that's just the crypto market. And Bitcoin continues to flirt with the 100K mark, which is being a big level that it broke last year. So that's something that's really at risk here. So not really loving the crypto market at all there. Now, you can see that in the crypto world, Bitcoin actually down 3%. Look at Ethereum down 5%. Litecoin down 13.5%. So again, and then who explain me how the Bitcoin Cash somehow is up 1%. So overall, not the market that you want to kind of stick your neck out to buy those pullbacks. It's just not the way the crypto is looking right here. So when we take a look at broader market sentiment and we look at the broader charts, well, is anything changed here? Well, this is where, we got this big, we did pierce through that prior support, which became the resistance. As you can see, we have quickly gone right above it. So you can see that over and over, we see a very similar pattern where we get a big flush down, and then that seems like that takes the shorts out, and it's right back at the resistance here. So 6,900 is the next level of resistance. We are also at this time of the year where, everybody start to think about, how the money started to come into the markets, how the year is going to end, performance chasing. That's just how we look at the last period. And if you look at the historical data, outside of 2018, there's, we get a big rally towards the end of the year. So I think overall markets still remain in an uptrend, and I think those pullbacks are just being short-term buying opportunities. Not a whole lot there as far as the technicals goes. Now, one of the other reasons for markets to be just so quiet is because we just don't have a lot of data. And and I had this question from a trader. It's like, is this the data that moves the market? But what about outside of that? And I think that's a very good point, because we get a lot of movement from these data, but we also get a lot of movement just from market volatility. So when you have or market sentiment. And if you have the broader markets that's just sitting at the lows, or the broad market, the market volatility sitting at the lows, again, that's where you're not really getting any volatility from the broader markets, and you're not really getting a lot of volatility from the news events, because these news events, most of them, especially the US data, is the one that's been more market moving, has been missing. So tonight we have, outside of what we talked about earlier, the government shutdown vote that happened at 7 p.m. Eastern Standard Time. We also have the Aussie employment report coming out about 7:30 p.m. Eastern Standard Time. Now, they are looking for a better than expected jobs report, 20K job gain, 4.4% instead of 4.5%. So we're looking for a drop in unemployment rate. So now we'll take a look at the Aussie. Aussie still remains in an uptrend, but we have a news event that that could move the currency one way or the other. And we had the pound GDP, which you can see it's due overnight. So that's it. That's all the data we are getting here. But like I said, look beyond that. Look into next week, because once the government shutdown is ended, we are going to get a resumption of that data. So now when we look at velocity score, it looks pretty clear and it's pretty spread out. We have the yen being one of the weaker currencies, Swiss franc being the strongest currency. I really want to take a look at pound as well, especially as we're going into the pound GDP overnight. And outside of that, you can see Aussie is still holding in there. Kiwi trying to play a little catch up here, but remember that Aussie Kiwi currency pair that I've been talking about, that's the one we will be taking a look at quickly here to see if there's any reversals happening there. Dollar and the CAD seems to be more tied together, but again, really, dollar is not the best or the worst currency, which is very different. If you compare that to let's say last year, we had periods, or even early this year, after a whole tariff situation that we had the big reversal back in April. The dollar took a big U-turn, so that's where the dollar was moving substantially higher and lower. But right now, dollar seems to be kind of stuck in that little range, with a couple of days up, couple of days down. But again, remember, that's the kind of price action where you want to be very careful, because it's just not following a trend. It's just going back and forth. So that's where we say it's not really a great currency to buy, or it's going to do short. And then again, we'll take a look at the euro along with that as well. So let's just jump into possible trades, get into our trading view, take a look at things, how things are moving. We'll talk about some potential setups.
Do you want to be a professional trader? Maverick Currencies is the oldest US-based Forex and crypto prop trading company that will pay you for trading with our capital. Trade our capital and keep 70 to 80% of the profits. We are looking for traders just like you that are hardworking and motivated. Click the apply link on the top right of this video to see if you have what it takes. That link takes you to a 4-minute video that explains the trader position available, and you read a list of FAQs that answer pretty much all the basic questions you have at this point. After watching the video and reading the FAQs, if you're interested, fill out an application, then you'll watch the full-length recruiting video, and then schedule an interview with one of our traders. Are you our next trader?
This is where, if you have any questions, any particular currency pairs that you're looking at, please go ahead and type in the chat box, and I'll take them as we go. So let's just start with the broader market analysis here. So you can see that nothing really is moving. I mean, so far, we're getting some tiny little pullbacks to buy into. So this is, again, market just being very bullish. Now, let me take a look at VIX, which is the broader market volatility index that you can take a look at. What do you see here? I mean, you can see that we are, especially the last few months. And if you're wondering why markets are quiet, I mean, take a look at it. It's just the broader markets very quiet. We had a period here where we see a pickup in volatility. We had a little period here, pickup in volatility. But overall, you can see it's been mostly quiet. Now, early this year, we had a big spike in volatility, but you can kind of go back in time and kind of study that, and you'll notice that there's some periods that are just generally volatile. Here we are back in 2023, lots of volatility, lots of pockets where things are moving. I mean, take a look at 2022, and imagine you're trading in this environment. Look at that volatility throughout the year. It was a pretty active period. So this is why, again, when you're backtesting things, or you're looking at results right now and you say, hey, things were a lot different when I backtested it, it's just because the markets were a lot different at that time that you traded. Now, when you start to take a look at currencies, let's just take a look at some currency baskets one by one. One thing I want you to take a look at, just from the volatility standpoint. So let's just take a look at like I said about S&P. Here we are with the S&P. I talked about how things are just very similar. But then volatility is what I was really talking about. As you can see, volatility so far this year has been very low, very little shocks. We had that big volatility spike early in the year, but the last few months it's just been quiet with a couple of spikes here and there. But this is where you can go back in time and take a look at, volatility perspective from the last, few years. And you'll notice that, look at 2023 was a pretty good active year. We are 2022, a lot of volatility. And even 2021, you can see it was a lot of volatility. So we are definitely, if you're backtesting the data for the last 3-4 years, you'll see that there's this vacuum of that low volatility, not a whole lot as we look at markets. It's just in it's a sweet spot. Like there's nothing really happening from central banks or from the fundamentals. Like everything's kind of holding in, despite a lot of the fears of tariffs. That was a big concern. And, guess what? We haven't really seen a big spike in volatility, and we haven't really seen the data deteriorate as much. So we are kind of in that sweet spot there. You can also get a sense of the data, like when you take a look at bond markets as well. And you'll notice that even the bond markets are the bond yield so far, you can see there, in the last 2-3 months, it's been just holding it steady. So we are at this period where just nothing major is moving along. Now, when you take a look at currencies, this is where I'll recommend everyone to take a look at the ATR, because that will tell you, okay, what's happening from a volatility perspective on those currencies. And you'll notice that as we go and take a look at the ATR and do a 14-day period here, you'll see the volatility is just very, very low, compared to from the historical data here. I mean, take a look at the dollar volatility. I mean, since early this year to now, the volatility is very low. Now, compare that to 2022, compare that to a bit of a roller coaster here, 2023, 2024. There was a lot of swings, but I mean, this line, if you zoom in, it's really, really flat. So, as a trader, we don't get the answer why something is like that. But as a trader, you need to know what's happening and you adjust to that market. And who knows how long that will take to really get us out of that volatility, but it's just a very low volatility period there across the board. I mean, take a look at the volatility in euro. Everything is pretty low. So why I'm talking about volatility? Because volatility is important to know as you're trying to pick a time frame. When you are dealing with high volatility, I usually lower the time frame because there's just so much happening on a day-to-day basis that me trading on a daily chart might not even be the best thing to do because things are just not moving. Things we're not likely to move in that direction in the 4 days because we have no idea how things are moving, and you have a bigger range to deal with. Now, what's happening here, and I mean, this is a 4-hour chart. As you can see, so far this week, look at the volatility in the CAD, ATR, look at the volatility in Aussie in the last few days, pretty low. Take a look at volatility in Kiwi. Like we are seeing, even though as things are rising up a little bit here, look at the volatility. So these are like slow periods where the only best way to sort of, look for a trade is, especially when you're getting a nice direction, is you set up a trade on a little bit of a higher time frame, because in a shorter period, there's just not a whole lot of movement to really capture and get in and get it out in the same day. But when things are moving like hundreds of pips in a day, yeah, it's so much easier to jump on, get in and get out. It's just less, meat on the bone, that we say. So you can see that everywhere you look at, I mean, especially the last, this week, I mean, pretty low volatility across the board. So this is where you need to sort of, understand the velocity of how things are moving and then choose the right time frame. And usually in this low volatility period, And especially when you see things are moving or having a bit of a directional move, this is where you need to be trading this on a higher time frame. And you just have to. That's just the best way to capture the move. And the yen was a great example where you can see that things are slower move, and you can see consolidation for almost a couple of days, and then we got a breakdown. So this way, you can't really time it. Like, how do I make sure I get this move? Unless you're doing a sell stop orders on those things, usually the best thing to do is set up a pending order, a buy stops or sell stops, or if you're already in a position, then just let the technicals work for you and just move your stops gradually. You don't really need to be that active in the system here. So that's just the way how things are moving. So now let's talk about where do I see a next big move happening? I think that's just the big question, is where is the next big move happening? Now we are getting some breakouts in certain currencies. Here we are, Swiss franc. We got a breakout. I saw a lot of traders jump on that Swiss franc yen. So great job on that trade. This thing, let's see how this thing ends today. But yeah, this one, it looks like it wants to go higher. But that's just not the broader market sentiment. Here we are with the euro. The euro is kind of holding in there. And, one thing you take a look at is the euro Swiss franc. And go out in time and you'll see that euro Swiss franc is at a very critical level of support. So question is this the level that is going to break, and we'll probably see a bigger move in Swiss franc? Well, it's likely, but you can see that I need confirmation for that. And that's a very strong level of support at about 92.62. So clearly, Swiss franc is the big winner here, but I just don't really love. We don't have that market backdrop. Especially when you take a look at markets are staying positive, or let's say the shutdown gets over tonight. The Swiss franc probably be a great trade to be on if your markets are actually falling apart. Now, when you look at the setup, this is where, if you're looking for a Swiss franc to the long side, this is a clear breakout point. And this is still in a bull pullback formation. If it holds this level and bounce, then the Swiss franc likely to go higher. If this fails or falls below, then we could potentially have a false breakout. So we'll see what happens, but you can see that the big moves kind of already happened here. Now, the question is the pound. And this is where, look at a weekly chart. And this is why I think this weekly chart looks very interesting to me. And it's just, again, it's all about timing. When is that going to happen? And take a look at the pound. So far in the last 2 years, this thing has stayed above this 50-day moving average. As you can see right now, we are right in between 20 and right above 50. So we had a pretty nice bounce right in here. If you look at this is a weekly chart. So again, we're looking at things from a longer term perspective. We got a nice little pullback right here. So we did bounce and we rejected it. So this is, again, the one that I'm paying a very close attention to. And if it does break, I think that will be a good signal for looking at the pound to be more on the short side. But so far, as you can see that the European currencies have held in really well. So until they really start to break those levels, I think that's where you need to be a little bit more patient. So what I'll do is I'll set up an alert here, say, hey, tell me if this is going to, break this level. Like this is the level of support. And I think that's where we'll probably see a bigger move that will come to take place. So pound is the one interesting here. Don't love it on the long side, but I do like them to kind of short off those bear rallies. So when you have a direction kind of picked up, and let's just say that if it's going the opposite way, those are always a good time to kind of be on the sideline, because I would rather trade with that direction. And when you're getting an opposite sort of price action, I'd rather just sit out, because direction looks a little bit more clear. So pound, I still like to the downside. As you can see, euro is just holding in, and then Swiss franc on its own is breaking out. So we're now seeing a collective move in the European currencies that seems to be a little bit more isolated with the Swiss franc. Now let's just analyze growth currencies. And I talked about the Canadian dollar here. I still liked it to the upside. The fact that it's holding in at that resistance level, again, same thing, comes about timing, right? So As you can see, we have been staying below this moving averages, and this thing is also right at the 50-day moving average. This one do stand a chance to strengthen a little bit here. We are seeing better numbers out of Canada recently. We'll have the CPI numbers next week. This one again goes on the top of the list here for the currencies to watch. Now let's go with the Aussie. As you can see, the Aussie is slowly chugging and moving along. We have this. Look at this. This nice little bullish signal here. The 20 is breaking above the 50. Again, we're looking at things from a higher, longer perspective. Now, when you go on a daily chart, what do you see? You see a strong resistance level that it has just failed to break above. So what I will do, same thing. I want to set up an alert. Say, hey, notify me if it breaks this level of resistance. That's where you will see a bigger move come in. So far, don't really, this one is holding in. You can see it's not a short. This is kind of holding in there. So I still like the Aussie to the upside, especially as the broader market stays strong. And then when we take a look at Kiwi, and this is the one where we are seeing a big divergence taking place between the Aussie and the Kiwi. And you can see this Kiwi remains in a downtrend, and right now this prior support is now the resistance. So let's just see if it rolls from here or does it rise up from here. There's one chart that you need to pay close attention to is Aussie Kiwi. And the reason I bring this up because we look at this to gauge what's strong, what's weak. So you can clearly see that the Aussie against the Kiwi has been the big outperformer. And a lot of times I talk about, where are you entering in the price cycle? You can see that big move's already taken place. The question is this where the move is likely to be? Or is this where it could top out? And this is where you want to take a look at a bit on the higher time frame. And you notice that this is about a 13-year high on this Aussie Kiwi. So going back here, and then going back over here, and then going over here. So this is a big window. So on the upper end, 114.94 is really the upper end of it. And you can see we're sitting at about 115.50. So the question is are we entering a new era on Aussie Kiwi that's going to continue moving higher? Or is this where we need to be a lot more cautious? And remember, I always use the word caution at these critical levels. And again, if you're looking for a next move up, look for prior levels to be broken. And in this case, you can see that we have 115.90 to about 116 is really the next level of resistance. Now, if this fails and fall back below, we could potentially see for the short term, we could see the Kiwi start to outperform the Aussie. So keep a close eye on this one. We have the RBA the RBA employment report tonight. And again, based on that, we might see a bit of a pullback here, or maybe this going to go right back up. But this one looks interesting, and I think maybe this is where there could be an opportunity in the Kiwi to catch up to the Aussie. We see things diverge from time to time, and then we see a big reversal. So, but for that, remember, we need confirmation. So we talk about ideas, we talk about levels, but that doesn't mean anything until we get those confirmations. So if you're looking between the Aussie and Kiwi, just take a look at the Aussie Kiwi pair to see where the move's going to be. Now, let's talk about the yen. And, I've talked about it, look at these rallies. All these rallies are just shorting opportunities. We are back at the lows here. And as you zoom out a little bit, you can see that, this was a critical level of support that we are breaking. And the next level of support is not really, till the lows that we saw last year. So I still think that the yen probably in this market environment, I think yen likely to stay weak. So really, we need to start looking at yen pairs and look for a continuity on those. Here we are with the dollar. As you can see, dollar had a massive sort of a breakout over here. And you can see that dollar is just pulling back. But remember, dollar is pulling back into the support area. So I don't really love it as a long. I don't love it as a short. But I think what I'm going to do is look at the dollar around news events for the U.S. economic data. As we start to get that economic data next week, we'll probably get more movement in the dollar on those news. And I think that'll be a great opportunity to sort of look at it. But if you look at it from from a trend perspective, it's above the 20, it's above the 50, but right now the price is going the other way. So you can see that it's just giving you a bit of a mixed picture here. So yen again seems to be the best one here, and then see if there's a catch up happening in some of these growth currencies. So let's just, the first one I like to take a look at is Aussie yen. Same thing. You can take a look at the resistance 1, 2, and 3. This time we're breaking out. This is the daily chart. So now remember, we talked about volatility. We talked about the time frame to use. And remember, I think this environment, as you're getting some directional moves with low volatility, we still like it a bit more on the higher time frame. So, and I think 4-hour chart would do a good job at this as well. As you can see right now, the level of support is around here, which is a prior breakout point at about 189. It's sitting at 101.21. I think this one we can use as a matrix or a 4-hour chart for further continuation on the upside here. Now, where's the next level of resistance? You can see we have some support resistance about 102, 103 area. And after that, there's a lot of room for that to run. So I really like Aussie yen to the upside based on that fact on some of the yen pairs. We can also take a look at Kiwi yen. Now, if the Kiwi does play a catch up, you can see it does have room for that to run. But for that, again, we need to kind of make sure that Aussie is continuing to advance against the Kiwi. Otherwise, I think, you look at the moving averages here sort of catching up. I won't be surprised that we rally a little bit here up to the resistance level. Here's the other one, dollar yen, and I think this is a perfect pair for trading, for the dollar strength. As you can see, despite that dollar weakening, we are seeing the dollar yen strengthening. Now that's a good sign. That's a divergence taking place. Now, when we go on a higher time frame, you can see that next level of resistance is about 158. So it does have room to run, and I think these are the ones that could be setting up for some end of the year rallies, as well as far as the technical goes. We also have Swiss franc yen, which I know a lot of traders were trading. I mean, take a look at this one, a beautiful break. Now we went from 189 to 193, about 194. Now, I think in the short, I think it's kind of extended here for a bit here. I wouldn't really want to jump in as a long on this one. Yeah, that was just a beautiful run here. So I think this could take a little pause here, and then probably we can take a look at elsewhere. I don't love chasing things here. I think there's just better risk to reward you can get on some of the other ones that are likely to move next. Here's another one, CAD yen. This is also on the top of my list here. I mean, beautiful rally, went from 108 up to like 110. But again, 4-hour chart, you can see this is the level we break. And then we are now just pulling back a little bit. So look for extensions, look for levels to be broken. And again, this is where with the low volatility, how timing could be a little difficult. But this is where you can just use a pending order, say, hey, buy me in if it breaks its level, and I'm just going to use these levels as my support. That's just the best way to capture a lot of these moves here. So yeah, yen pairs again looks the best to me. Now let's talk about pound here. What do I like to short pound? I mean, we can take a look at pound Aussie. This is the one that I'm paying close attention to. Look at that. We got a little bit of rally here. Yeah, we haven't really broken that level yet, that 2 mark. I think if it falls below that, there could be a little resumption in that move there. Even if you take a look at Euro Pound actually is at the highest level in 1 year. So as you can see, there's a big divergence that's taking place in Euro Pound as well. So clearly Pound is the weaker one. You can always pair that against those two. I think Rob looked at Pound Swiss franc, which again worked out perfectly as far as the short goes. So this thing is already moving lower. So the question is, where do you think the next big move is? Where you're entering in the price cycle? And I think those are the important questions to ask right now. I think yen crosses looks the best to me here. So keep a close eye on what happens with the vote and see what the market does. You can look at the futures market in your trading view, but just type in US 500. These are the futures that will tell you. And again, if everything goes through, I won't be surprised that we see a risk on rally, in the markets. And in that case, I think those yen pairs, Aussie yen, those will probably do well in that environment. So those are the ones that I'm looking at. If you have anything that you're looking at, let me know. And then I'll wrap things up over here. All right, Drew says, I'm guessing that we can expect to see delayed US data schedule on the calendar versus them releasing randomly when completed. Good question. So, and this is where, for a lot of you, this probably be your first time, experiencing a government shutdown. And even though if you're trading for a while, like last time we had this longest shutdown happen, that was like late 2018 to 2019. We had a move just in that. That become a distant memory because that happened like 6 years ago. So I was literally researching this question because I'm trying to figure out the timelines as well. As you can see that thanks to quick search on this Grok AI, kind of gives you a good timeline. So as you can see right here on this one, how quickly this data will be released. So you can see that these will come out randomly, meaning that if the shutdown ends tonight, then payrolls comes out 2-3 days after. We have the consumer price numbers will come out 2-3 days after. So you can see that things are not going to come out as scheduled for the next meeting, but they will start to release as the shutdown is over. It will start to get released within 2-3 business days to 1 or 2 weeks. So yeah, I think this is where you want to keep a close eye on the economic calendar, because economic calendar will update as we get those days when those data will be released. And again, if you're waiting for volatility to come back, well, guess what? That's the time. That's the time to look for and trade for volatility. And let me tell you, one of the things that happens in markets a lot of times is that sometimes, I'm sure you experience it too, where you at the time you pivot and say, okay, I got to go for low volatility. That's where the market turns and becomes a higher volatility. So, keep a close eye on that. I know there's always that little delay, but when the next time it happens, you know exactly what to do. So right now, that's the market environment. But well, guess what? That can change fast too, and then we'll have to adjust with that market. So hopefully we get some resolution, and then start to get some data. And then hopefully we'll see a pickup in that activity. And again, you'll see that in those ATR. When you look at that move, you'll see that in the ATR. So, and right now, as you can see, the dollar is weakening going into it. So, perhaps dollar would be at a retest here or this level here. So yeah, dollar's pulling back. But like I said, if I have to compare dollar against the yen, I actually like yen short better. And this is, again, one of the reasons why I'm looking at more yen positions rather than dollar, because clearly dollar yen looks like a good long, or the divergence is happening there. So remember, that's what we always want to take a look at. Take a look at euro Swiss franc if you're trying to figure out if the euro is going to be stronger or Swiss franc is going to be stronger. And again, always look for these key levels, because that's where prices will sometime reverse. And on this euro Swiss franc, it's pretty clear. Aussie Kiwi, look at that. That's a crazy level. You take a look at dollar yen, that's another level. So as you can see right now, as we're going through the charts, that we are getting a lot of divergences in a lot of currencies, like euro pound at the highest level. There's a lot of divergence taking place. So you want to make sure that you're following that divergence, but at the same time, and then that divergence switches, you want to be switched with that market as well. All right, let me know if you have any other questions. Otherwise, we'll just wrap things up here. I know we kind of went a little bit longer today. But I just wanted to go over some of the volatility stuff, because I had a lot of questions about that and seasonality. And yeah, when you see the same thing happen over and over again, you're used to it. Exactly. But if you're experiencing things for the first time, again, just realize it's just the market cycles. We don't control that. We trade that. And that's why we have to have, the correct strategy, correct timeline, correct everything to tackle that exact moment. Thanks for joining again. I'll keep everyone posted once we get some news from the shutdown front or the markets. I'll post it in the Discord, so keep a close eye out there as well. Thanks for joining. Enjoy the rest of the day. Cheers.